Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your financial market update for this Wednesday, the 12th of July, 2017. We're just after 3:03 p.m. Central Daylight Time. Bad storms in Chicago. I'm headed home in a few minutes. That's why I'm putting this out early. Actually, I'm going to a concert outdoors. I don't know what that's going to be like, but we'll see. All right, as you take a look at what's going on in the marketplace, it's the Goldilocks scenario. Chairman Yellen, Fed Chairman Yellen, came out, woman, I guess the right word, Fed Chairwoman Yellen, came out and said that, yeah, the U.S. is on a path of another interest rate hike, shrinking the Fed balance sheet, but we're getting to a neutral policy much quicker than they thought. She admits the inflation scenario just isn't there the way that they would thought to be. It's not a surprise. She still thinks it's transitory. I think that's a word for they don't know when things are going to happen. And she did talk about the fact that the middle class is where the problem is, those paying jobs there. You've got a lot of demand for the low-paying jobs. You've got a good demand for the high-paying jobs, but the middle of the road just isn't where things are going at this point. That gave the market a solid bid. It took stocks up. It even took up metals because instead of raising interest rates, well, what does that really do? Maybe gold doesn't have that battle as much as you might have thought it did. The dollar index up a fraction, but the euro down hard, the Swissy down, the British pound, well, that's the Brexit issue. But the Japanese yen even got a bid today, which is a surprise to me. I thought that market would give that up after the report. And the energy sector, what's happening right now is there are serious problems with Libya, Nigeria overproducing, but it's also Iran. It's Iraq. Believe it or not, Saudi Arabia is in that league. So what's happening is OPEC has called a special meeting. Now, it's not called an emergency meeting. It's a special meeting. It's going to happen next week. And obviously, they're going to try to come up with ideas as to how to shore up production numbers. In other words, get them where the caps stay where they're at. I think they're going to get a demand right in place now on Libya and Nigeria. And Nigeria has already said late in the day they're wide open to a cap. They want 1.8 million barrels a day. That doesn't mean they're going to get that. So we'll have to see how that all plays out. When you come, though, to the NASDAQ and you watch what's going on, we're getting this bounce. And the key is, can you close over this area here? And that's going to be the big number that I'm looking at. And when you come back a few days, you can see just that area is right in through here on a closing basis. And that's what you want to see. In terms of the swing line, you already have no chart pattern. Now, what do I mean by no chart pattern? Ideally, as a chartist, you're looking for a pattern in an up market, if that's what you're looking for, of higher highs and higher lows, in a down market, lower highs and lower lows. The hardest pattern, and one that you try to avoid, is when you get a lower low and a higher high. There is no pattern there at all. You can have biases, and the bias, I believe, when you're over the 18-day moving average of closes, when you're trading over it or close over it, I say it's up. In this case, the 18-day average is on the way back down going to offer some support, as the 100-day down here offered a touch of it, but you never really did hit it right on the head. You got close. The market is staying within Bollinger Bands. You can see the two black lines, and the importance of that is Bollinger Bands are an algorithm designed to keep the market trading within them. The longer a market goes sideways within them, the bigger, if you will, that sideways action becomes as a force that when the market eventually breaks up out to the upside or the downside, the longer the trend goes. You've been in this now for about 4 weeks, just basically in sideways action. Now, the NASDAQ isn't the leader. You're going to see that in the Dow, that has become one of the leaders, as has, all of a sudden, the Russell. That has come alive. The pattern on the NASDAQ in terms of momentum, pointing to the upside, bias to the upside, but not a trend in terms of the swing line, If it continues up, look for the 58.46.5 level, the upper Bollinger Band, to be the resistance. Now, as I said, the Dow is the stronger, but it too has a problem right here. Each time it hits this upper Bollinger Band, it's been unable to push it out to the upside to get anything going. Today is no exception. That number was 21,492. You hit 21,531, and you're going to finish the day in the cash market at near the 21,481 level. Now, this is the futures, but the cash is going to be right in that type of chart pattern. In the S&P, you did not make new all-time highs, but you're certainly in an uptrend. This is a better-looking chart than some of the others. You got the higher lows, higher highs. I'd look for support around 24.29. The dilemma is that you're not wrong unless you get back under 24.10, and that risk is almost $1,000 a contract. A little rich for my type of trading blood. The Russell coming on for these all-time highs, knocking on the door, if you will. The pattern, higher lows, higher highs. It got right to the upper Bollinger Band. Let's call it 1430. Today's high was 1433, and you're going to finish off just slightly under that. You got another few minutes before settlement prices come in on the futures, but it'll be in this general area. In the VIX, each time you get up and over that upper Bollinger Band, you haven't gotten under the lower one. So I can only talk about the upper one. You get thrown back to this 18-day average of closes. You're just sort of stuck in that. There is a downside bias in the market, and there is a trend down, lower highs, lower lows. But you're immediately in oversold territory. In the T-bond market, once again, it got good news from the Fed in the sense that the Fed is not saying pedal to the metal, let's keep raising interest rates, raising interest rates. Now she's talking all of a sudden, Ms. Yellen, that is, about the market getting close to a neutral territory. There was no talk about raising, by the way, the expectation of, inflation from 2% to 3%. She said that talk hasn't come about. You're still very much in a downtrend with an embedded reading. This market is not out of the woods unless the red line gets over 20, and then I can make an argument you're going back to the 18-day average. Right now, the bears have control. Support's very clear at the combination of the Bollinger Band in black and the 100-day average of closes. Remember, on Bollinger Bands, you typically stop when you hit them. That doesn't mean you can't push them to the upside as you did here, or push them to the downside as you're doing there. But it's rare that you close outside of them, especially for any length of time. You can do that, and you did it right here. But when that happens, it's often met just like you're bouncing away now. If you take a look at the soybean complex, on the upside, it's lost its reading today. But you had a whole series of days where the market closed under it, and now it's coming back up. Here you lost your embedded reading. So you either break hard tomorrow to get it back, or you're going to that 18-day average, in my opinion. In looking at the dollar index, you're in an oversold condition that, depending on the close, is just going to stay oversold, not embedding yet. If any of these numbers are over 20, you're not embedded, and that's the problem. And then it has to keep that way several days in a row. You still have the downtrend. You got lower highs, lower lows, and the bias is down. You're just not able to grab that traction and keep it down. And if you look at the euro, you have the embedded reading. That's in place now. Pretty ugly looking chart today with that drop, but you haven't done any damage on it. Get the red line to close under 80. It's 85 right now. I'll have a different picture for you. But I think tomorrow it's up to the bulls to support this market and try to turn it back to the upside if they want to get something going. In the British pound, you fell from the upper Bollinger Band right to the 18-day average of closes, held support. Is there a pattern here? Really, there isn't. The swing line is down because you have lower highs, lower lows, but the bias is up because you held the 18-day average and closed over it. And while this is all going on, you've been able to work off an overbought condition in the market. In the Japanese yen, the market's had a good bounce today, and you're the first day of losing the embedded reading. It either immediately gets it back in the morning or game over, and you're probably going to make a run to that 18-day average of closes. So you've got to be very careful in that if you're playing the short side. In the crude oil, flat momentum. You do have an uptrend at work, higher lows. I think you can see that. This high is higher than that one. If you drop down tomorrow, and get to the 18-day average, you will have a pattern of lower highs and higher lows. That is not going to be a trend. Right now there is a trend, and should the market be able to rally more, 46.81 is the number. Should the market falter, the 18-day average becomes a potential support. In the gasoline, you have a similar type pattern. You've got the higher lows, the higher highs. This rally did not carry as high as that rally, and now you closed a little lower. We'll see if the market does anything with it. I am concerned that it's immediately in an overbought condition. And in the nat gas, you're in an uptrend. You've got higher lows, higher highs. You've closed over the 18-day average, and momentum, while stalling a little bit, is still pointing to the upside, so it's still in the friendly area. I want to remind you that we offer you a $79 value for a year subscription, free, absolutely free. You're not going to pay a penny, to Modern Trader magazine, and they have given it a whole new look. It covers FX trading, derivatives, the futures markets, stock market, options trading in the markets. Name it, it's there. You want to talk rails, that's what they're talking this time in the stock markets. You want to talk about trading strategies, where they're there with a number of different stories, and they do this over and over. Now it's about the tax rebate, what's going to happen with it, interviews with top people. But as a real market technician, I take to this because it's written in a way that I can understand it. Cycles are being talked about, industries. They've really broadened everything out. It used to be a futures magazine only, but as a trader, you want a trading magazine, and it's not one of those magazines that are so much into concept of math that I get lost. To back it up, daily market focus stories come out because the magazine's once a month. To get your free subscription, call us. You can go to our website to sign up for it at www.iraepstein.com. You can click up here. You'll see an icon. If you're watching me on YouTube, click that. You'll get right to the forum page, or under us on many websites. It says, click here for Ira's free offers. I'm Ira Epstein. Thanks for watching, and I'll see you all tomorrow.